Hi everyone, in this video we'll be going over A-Level Accounting 2022 October-November paper 2 question number 3. This is the structured paper 2 which consists of 4 questions. 2 of those questions are of 30 marks whereas 2 of those are of 15 marks, and we're given a total time limit of 1 hour and 30 minutes. And since question number 3 is of 15 marks, ideally we should be spending about 15 minutes in order to complete this question. And in this video as well, we will be attempting to solve this question under 15 minutes. So without any further delay, let's get started. Unlimited provided the following information for the year ended 31st August 2022. Alright, then let's have a look at our question. We need to calculate the following efficiency ratios showing the formula used. The very first one is trade receivables turnover in days. And the formula for trade receivables turnover in days is trade receivables divided by credit sales times the number of days, so that's 365. Okay, so let's substitute the value for trade receivables, which is given right here to be 19,800, and let's divide it with our credit sales. And here we can see that cash sales accounted for 20% of the revenue, which means that the remaining 80% of the revenue is going to be credit sales, right? So let's figure out the amount for credit sales. That's going to be total revenue, which is given right here to be 292,000 times 80%, which we can write down as 0.80. And this results in the value of 233,600. So this is the required credit sales. Let's substitute it. Times 365. So our trade receivables turnover in days is going to be 19,800 divided by 233,600 times 365, which results in 30.94. And this is in days, and we need a rounded off figure, so we're just going to increase it by 1. That's 31 days. So the correct answer is going to be 31 days. Alright, then the next one is trade payables turnover in days. Again, the formula is going to be trade payables divided by credit purchases times the number of days, which is 365. Alright, let's substitute the value for trade payables, which is given right here to be 10,100. Now we need to divide it by credit purchases. Again, we are told that cash purchases accounted for 25% of the purchases, which means that the remaining 75% will be the credit purchases, right? So let's figure out credit purchases in a similar way as we figured out the credit sales. We have our total purchases to be 172,000. So the credit purchases is going to be 172,000 times 75%, which we can write down as 0.75. This results in an amount of 129,000, which is our credit purchases. So let's substitute this amount. That's 129,000 times 365. So our trade payables turnover is going to be 10,000 divided by 129,000 times 365, which results in 28.58. Again, this is days, so the rounded off figure is going to be 1 greater than this value, so that's going to be 29. So the correct answer will be 29 days. Okay, now the next one is current ratio. And the formula for current ratio is current assets divided by current liabilities. Okay, let's figure out the total for current assets and current liabilities. The very first one, current asset we have will be cash in hand, and the amount is 650. Then we have our closing inventory with the amount 64,800. Then we are given other receivables with the amount 6,080. Then we are given trade receivables with the amount 19,800. And this results in the total current assets to have the amount of 91,330. Now let's figure out our current liabilities. We have 6% debentures 2022. And remember that this information is for the year ended 31st August 2022, which means that this amount is now payable within a year, right? So this will now act as our current liability. So we need to include this value of 20,000. Then we are also given the bank overdraft with the amount of 9,430. Then the next one we need to include will be other payables with the amount of 4,340. Then we have our trade payables with 10,100. And this results in the total current liabilities to have the amount of 43,870. So we just need to substitute this amount of 91,330 and 43,870. Let's do that. We have our current assets of 91,330 and the current liabilities of 43,870. This gives our current ratio to have the value of 2.08 is to 1. So the answer is 2.08 is to 1. Then we have liquid ratio. So the formula for liquid ratio is current assets minus closing inventory divided by current liabilities. Okay, so we have the current assets to be 91,330. We need to subtract the closing inventory and then divide it by our current liabilities of 43,870. Let's have a look above for closing inventory. We can see that the closing inventory has the value of 64,800. Let's subtract this. Now this gives our liquid ratio to have the value of 0.60 is to 1. That will be the answer. Okay, this concludes the second part. We can now move towards the third one. The directors have reported a 5% increase in profit for the year ended 31st August 2022 and are satisfied with the results. We now need to advise the directors whether or not they are correct to be satisfied. We need to justify our answer and support it by considering the efficiency ratios and liquidity ratios in A and B. Let's have a look at our efficiency ratios. We can see that our trade receivables turnover in days is 31 days, whereas the trade payables turnover in days is 29 days. So this just means that we receive the payments from our debtors or credit customers within 31 days, whereas we pay our suppliers within 29 days. And we can see that we are paying at an earlier date as compared to the date at which we are receiving, right? This can result in the cash flow problems because we are paying suppliers before receiving settlement from customers. Let's write it down. The company may experience cash flow problems as a result of paying suppliers before receiving settlement from customers. Now let's have a look at our liquidity ratios in B. We can see that the current ratio is 2.08 is to 1 and the standard current ratio should be 2 is to 1, which means that current ratio is absolutely fine for this company. But the liquid ratio is 0.60 is to 1 and generally the liquid ratio should be greater than 1 is to 1. So we can clearly see that it is not enough, right? And this is due to the fact that we have very high closing inventory that reduced our amount in the numerator. And this may result in an inability to pay its short-term debts. So let's write it down. The company may struggle to pay its short-term debts due to the high level of inventory. Now, based on these factors, we need to advise the directors whether or not they are correct to be satisfied. we can see that from the first part of efficiency ratios, we concluded that the company may experience cash flow problems. And from the second part of liquidity ratios, we concluded that the company may struggle to pay its short-term debts. So from both ratios, we figured out that the company may go through some sort of problems, which is not something to be satisfied about. Therefore, the directors should not be satisfied. Let's write it down. Therefore, the directors should not be satisfied with the results due to potential liquidity problems. The liquidity problems exist because obviously the company is experiencing cash flow problems and they are struggling to pay its short-term debts, which both involves cash, right? Alright, this concludes the third part. We can now move towards the fourth one. We now need to state two limitations of using accounting ratios to compare the results of two businesses. So the very first limitation is that ratios definitely do not consider non-financial factors such as the efficiency of the employees or the skills and the human resources that the companies have, right? Let's write it down. Ratios do not consider non-financial factors. And the second one is that different businesses may use different accounting techniques, right? Such as the depreciation technique. Some business may use the straight line method, whereas others may prefer the reducing balance method. And if you were to compare those two businesses, then definitely the net book value of the assets is not comparable since we are using two different accounting techniques. That is also a limitation. Let's write it down. Businesses may use different accounting techniques. Alright, this concludes the fourth part as well as this question number 3 of 2022 October-November paper 2-2. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.